Energy is one of the most important sectors in the global economy. When oil prices rise, energy companies often benefit, and smart investors pay attention. But instead of picking one risky oil stock, many investors prefer a simpler strategy. They invest in oil and gas ETFs that hold multiple companies in one fund. So in this video, I'll show you 3 oil and gas ETFs investors are watching right now and why they could be interesting for long-term portfolios. The first ETF is the Energy Select Sector SPDR fund. This is one of the most popular energy ETFs in the market. It focuses on the largest oil and energy companies in the United States. Some of its top holdings include companies like ExxonMobil and Chevron. Why investors like XLE is simple. It gives you exposure to the biggest and most established energy companies in one single investment. That makes it a common choice for investors who want exposure to oil without taking too much risk on smaller companies. The second ETF is the Vanguard Energy ETF. This ETF is designed to track a wide range of companies across the entire energy sector. Instead of focusing only on a few large companies, VDE holds dozens of energy stocks including producers, refiners, and service companies. This gives investors more diversification across the energy industry. Another reason investors like this ETF is that Vanguard funds are known for low fees and long-term investing strategies. For people building a portfolio slowly over time, diversification like this can be very valuable. The third ETF is the SPDR S&P Oil and Gas Exploration and Production ETF. This one is a little different. Instead of focusing mostly on giant energy companies, XOP focuses on oil exploration and production companies. These are the companies responsible for discovering and extracting oil and natural gas. Because these companies are more closely tied to oil prices, this ETF can sometimes be more volatile. But when oil prices rise strongly, exploration companies can benefit significantly. That's why some investors consider XOP a higher growth energy ETF. Energy is a sector that moves with global demand, geopolitics, and economic growth. That's why many investors include energy ETFs in their portfolios as a way to diversify and gain exposure to the oil and gas industry. Instead of betting on one company, ETFs allow investors to invest in an entire sector at once. Now I want to hear from you. Which energy ETF would you invest in? XL, VDE, or XOP? Let me know in the comments. And if you want more simple investing breakdowns like this, make sure to like, subscribe, and follow for more stock market insights.